Good morning, everyone. Happy Tuesday. It's back to school day for my son here in Singapore. I'm nervous but also excited of how things are going to play out. Let's see. Welcome to today's episode. 3 things that you can look to hear. Credit markets are so hot right now that they're luring companies out of hibernation. India's credit rating and PBOC's move in small business loans. Stocks rose despite the prospect of further domestic unrest, tension with China and lackluster virus drug results as investors focused on signs of economic recovery. Tech shares outperformed after reports showed a measure of American manufacturing rose for the first time in 4 months. Treasuries edged lower with 10-year yields up about 1 basis point. The dollar declined against all but one G10 counterpart, with the Aussie rising about 2%. Big move on the Aussie yesterday. Oil and gold advanced. Asian equity futures are on the upswing. 10 of the S&P 500's 11 sectors rose on Monday, with real estate, energy and financials the best performers. Only the healthcare group actually declined. In terms of data from surveys of purchasing manufacturers indicated that factories in the US and abroad continued to reduce output last month, but the pace of deterioration slowed as governments eased coronavirus-related restrictions. In China, the first country to impose sweeping lockdowns to combat the virus, factories reported an increase of activity, offering investors hope that other countries would follow. In the US, the Institute of Supply Management's Manufacturing Index for May rose to 43.1 from a 11-year low of 41.5 in April. Now remember that the reading above 50 indicates an increase in activity, while a reading below that level indicates a decrease. China halted some US farm imports. The government told major state-run agricultural companies to pause purchases of some goods including soybeans as it evaluates the escalation of tensions with the US over Hong Kong. Now it's the latest sign of the trade deal in jeopardy. India's credit rating was cut to Baa3, that's the lowest investment grade at Moody's. The firm cited challenges in addressing a prolonged slowdown and the government's deteriorating fiscal position. The outlook remains negative. The country had missed its budget deficit target even before the worst of the pandemic. S&P and Fitch already have comparable ratings on the country. The PBOC, in a move that's similar to the Fed, the PBOC said that they will purchase loans made to small businesses from some banks. It will use about 400 billion yuan, which is about 56 billion, from a separate program to buy about 40% of uncollateralized loans to SMEs with maturities of at least 6 months that are made between the March 1st and December 31st of 2020. So direct support from the central bank to small businesses. Moving on to equity, billionaire Uday Kotak is seeking to raise about 69.4 billion rupees or $919 million, selling shares of Kotak Mahindra Bank at about 0.7 to 2.7 discount to Monday's close. So Kotak, the founder and CEO, settled a dispute with RBI in January by agreeing to cut his stake to about 26% by August. Shares of Target fell 2.84 or 2.3% after the Minneapolis-based retailer closed or cut hours of more than 200 stores over the weekend due to unrest. Drug maker Pfizer fell about $2.73 or 7.1%. The company said late Friday that it would stop a study of potential breast cancer treatment. Another drug maker, Gilead Sciences, also fell about 3.4% after it reported mixed results from the latest trial of COVID-19 treatment it is developing. An interesting note from Harvard's Jesse Fred, who wrote in Financial Times, is that trying to force US listed companies to comply with accounting rules would backfire on American investors. So the SEC might announce a trading ban on a firm, which will cause its stock to tank. The controlling shareholder can then take the company private and relist it at home at a higher valuation, potentially making billions. So that was an interesting perspective from Harvard's Jesse Fred. On the fixed income market, credit markets are so hot right now that they're luring companies out of hibernation to get in on and get a piece of the action. Amazon and Ralph Lauren were the latest to jump in to the trillion dollar fray. So the internet giant isn't a frequent issuer, though it borrowed about 16 billion in 2017 to help its acquisition of Whole Foods. The fashion retailer hasn't tapped the US investment grade market for nearly 2 years. Moving on to Forex, RBI's rate decision today. Australia's data that is to be released with the central bank decision may indicate whether the country is likely to have 2 consecutive quarters of economic contraction. That's its first technical recession in almost 3 decades. The RBI may hold both the cash rate and the bond yield target at 0.25% on Tuesday, which is today. And it bought government securities on only 2 days in May. So again, we have seen this across the board. A lot of central banks are coming and, signaling to the market that they're going to do a lot more, but actual purchases are not much. And that's something that we'll be able to look forward to when the RBI announcement comes later today. So that's your market update. Stay safe and healthy, everyone. And I'll speak soon. Thank you.